U.S. stock markets closed lower across the board, with all three major indexes falling sharply as risk aversion surged. The AI computing and chip sectors pulled back from high levels, and uncertainty over global economic uncertainty and tariff policies pushed capital heavily into safe haven assets. Equities came under clear pressure, trading volume expanded, and caution dominated market sentiment. Next, at the close on February 27th Eastern Time, the Dow Jones Industrial Average dropped 521.28 points, or 1.05% to 48,977.92. The Nasdaq Composite lost 210.17 points, or 0.92% to 22,668.21. The S&P 500 fell 29.98 points, or 0.43% to 67,888. All three major indexes traded weakly throughout the session. The technology sector continued to drag down the market. Safe haven demand strengthened, and risky assets were broadly sold off. Sectors closed broadly lower, with technology and semiconductors leading the market decline. Nvidia's positive earnings were already priced in, sending its stock sharply lower and dragging down chip stocks including Broadcom, AMD, and Lam Research. The AI industrial chain corrected across the board. Defensive sectors were relatively resilient, but failed to reverse the market weakness. Finance, energy, and consumer sectors also pulled back. The market lacked clear leadership, and investor caution prevailed. On the macro front, rising global economic uncertainty intensified safe haven demand, while shifting tariff policy expectations weighed on corporate earnings and risk appetite. U.S. initial jobless claims were slightly volatile. Market views on the Fed's rate cut pace became more cautious, and U.S. Treasury yields swung widely, amplifying downward pressure on stocks. Growth sectors with strong earlier gains faced heavy profit-taking, accelerating valuation digestion. Commodity markets diverged sharply from equities, with safe haven assets surging across the board. Gold and silver prices rallied strongly, hitting recent highs, supported by geopolitical risks and strong safe haven demand. International crude oil prices also moved higher on rising geopolitical conflict expectations, leaving the energy sector relatively resilient. The US dollar index fluctuated mildly, foreign exchange markets were stable, and capital flows clearly favored safe havens. Looking ahead, US stocks will remain driven by safe haven sentiment and policy uncertainty in the short term. The correction in the technology sector is not over, and market volatility may stay elevated. Geopolitical developments, tariff policy updates, and Federal Reserve signals will be key factors. We recommend strict position control, increasing allocation to safe havens such as gold, avoiding high-valued growth sectors, and waiting for clearer sentiment and policy direction before adjusting positions.